Welcome back to Liberty and Finance. We are doing this live, really and truly live. Sorry, it's not our usual time for our weekly market update, but this is when we could work it out given travel schedules. This is Donegan Kaiser, your host, and I have Andy Schectman, the CEO of Miles Franklin Precious Metals, on the line with us. Today is Monday, November 10th, 2025. Andy, thanks for coming back on Liberty and Finance.
Good to be back with you, Donegan.
It's an exciting day for those who closely follow the silver market, as silver is back over $50 an ounce this morning. There was considerable hand-wringing going on over the past 2 weeks. Can you bring us through perhaps what that was all about? And you've been telling us, as have a number of our other analysts that we typically interview on our channel, such as Michael Oliver, Christopher Mullen, and others, that nothing fundamentally has changed in the things that have, the dynamics that have been driving the major bull market in silver, but we just came through a rather harrowing swoon. And can you tell us what you're seeing now and what you see going forward?
Well, look, it's important to remember that even with the sharp correction we saw, silver is still up between 65 and 70% this year. And I mean, I don't know how many assets rank higher than that, but when you have any asset that appreciates in a parabolic manner 40% in 2 months, a correction is inevitable. This is what overbought is. And, you know, it shouldn't come as a surprise to people. And I think that certainly is something that's hard to rationalize for us gold and silver bugs, because we've waited so long and feel that, you know, that the market should have done this a long time ago, gotten to these levels. But suffice it to say, this is a very high stakes game where some of the biggest institutions on the planet got caught very much offside and were, you know, actually looking at what could ultimately be a existential threat to their survival. And so they did an awful lot to slow down the rise. But here we are again, back up over $1 plus and back up over 50. And maybe it's because silver is now a critical mineral. We've been talking about that for a long time now. Now it's official. Maybe it's the realization that it's irreplaceable, that it's the most conductive element known to science, the lifeblood of energy and data and power itself. Who knows? But the bottom line is that with the U.S. government calling it a strategic mineral, they've put a floor under the price, and they will, I think, start to purchase it. At the same time, you have the Chinese Ministry of Commerce. Their name is, the acronym is MOFCOM, Chinese Ministry of Commerce, has issued new rules regarding the state-traded exports of a few different commodities, including silver. So they are doing the same thing. They aim to step up, if you will, the protection of resources, and that means curtailing exports in 2026. And look, when you realize that the largest refiner of silver in the world, China, is restricting exports and has announced starting in 2026, all silver exports will require individual government licenses from Beijing. To me, this move classifies silver as a resource of national interest, not just to the United States, but signaling a strategic shift towards state-managed supply, including places like China. It's a big deal. It's a very, very big deal. And I think the bottom line is silver is being redefined from an industrial metal into a geopolitical resource, or into a strategic element, not just in the United States, but all over the place.
Related to that game-changing shift in the realization of silver's role, there have been several questions submitted by clients that they'd like your view from inside the retail silver supply chain on how local coin shops and others are likely to be able to fare when we hit triple-digit silver, for example, as Keith Newmeyer, our mutual friend at First Majestic Silver, keeps predicting. And frankly, Michael Oliver has also called for in the next couple of quarters. He says he will not be surprised to see triple-digit silver in the next couple of quarters. How does that change the game for major dealers like Miles Franklin, or smaller dealers at the local level?
it will consolidate into more major dealers, or those smaller dealers would consolidate, in my opinion, because the cost of maintaining an inventory is becoming exponentially more expensive. And with that, you have insurance and shipping and all of the things involved. It's expensive. It's much more expensive than it was to hedge a position at higher levels, takes away some of that risk. But most of the smaller coin companies or local coin shops don't hedge their exposure. So it's a big deal. You have a large inventory of silver, and the volatility that we've seen where it can fall, 15-20% in a short period of time. That's enough to really scare a lot of these coin shops out of business. I think it's an interesting thought experiment, but my guess is the higher the price of metals go. I mean, look at gold. A tube of gold eagles now is well north of $80,000. And so how much gold can you really have as a local coin shop, not only from a standpoint of maintaining an inventory, you better have millions of dollars to use, but insurance and shipping and all of that stuff, it's becoming a lot harder. When gold was $1,000 an ounce, I remember my father-in-law sending me a text message, "Congratulations, so gold's finally over $1,000." Well, back then, it wasn't too long ago. A tube of gold eagles is just over 20,000. It's gone up 4 times, and that's just one tube. So you want to have what, 500 ounces of gold in stock as a local coin shop? I mean, how much money do you have? And then you add silver and platinum and the cost of insurance and whatnot. It's a tough deal, I think. The higher it goes, the fewer the choices, if I had to guess, you'll find.
A related question that has come up from viewers and clients: as the price of metals increases, the logistics of shipping them, for example, for people who were favoring, for example, 1,000-ounce COMEX bars, or even 100-ounce silver bars, or maybe 10-ounce or kilogram gold bars, as the price goes up, how does that impact the realistic challenges that they'll be facing with shipping valuation limits and things like that?
It's real. I mean, we probably do as much shipping as anyone in the United States on a, that's not a fair statement. Our shipping with Federal Express is as robust as it can be without being someone like Amazon. And so we get all of the discounts that you would get, and have all of the insurance that you could get. And, we still don't put more than $150,000 of product in a particular package. You try to ship it by registered mail, the most they'll give you is 50,000. So if you can only do 50,000 by registered mail, you're not even doing a tube of gold eagles. And, that's challenging. The costs are getting more expensive. You look at companies like FedEx, their costs are going up. It's tough. So prices will go up. Insurance will go up. It's real for sure. So again, this further would, I think, push towards consolidation into the larger companies who have the wherewithal to do it. That's not great for the consumer, but it's just the reality of the cost of doing business, and it's increasing dramatically. If it continues down this path, yeah, it would be very interesting if you saw triple-digit silver, where you're talking $50,000 for a monster box. Yeah, it's getting tough, but triple-digit silver really isn't that crazy anymore. Keith Neumeyer was the first one to talk about it,
Yeah.
and when you look at the fundamentals behind it, it's not that outlandish to say that.
A related question again from Gold Anon says, what is the best silver buy right now outside of junk silver? Maybe you first want to touch on junk silver and then look at what are the major considerations, because I know that question, what is the best buy, there's different considerations. So what do you think through with clients when they're asking you at first, tell them why and when you recommend junk silver versus what do you recommend next if they say, well, where's the biggest bang for my buck outside of junk silver?
Junk silver is not sexy. It's not. It's dimes, quarters, and half dollars minted prior to 65. But where I say it's the best value, if you can do anything at or near spot, which junk silver is, or maybe a little over, but not much, you're buying something that is the best value with no opportunity cost, with no added premium attached. And you put that in reference or measure it against where it's been in the past. Um, during the pandemic, because of its utility and its divisibility, the premiums were second only to American Eagles. And the U.S. Mint has been the model of inefficiency for a long time. And I asked people to listen to Bix Weir's interview with Jack. What's Jack's last name? I forgot Jack's last name. It'll come to me in a moment. But Jack Sermon. Jack Sermon developed the Silver Eagle program at the U.S. Mint, and Bix did a 3-part interview with him a couple of years ago. I remember almost falling off my chair where he said he was approached by, at the time, his boss, which would have been the Secretary of Treasury, Janet Yellen, who told him to make as few Silver Eagles as possible without creating a global backlash. I mean, he actually said that. That the primary distributors came to him with far more demand than they could fill. Like they wanted another 36 million and they gave him 12. And he said it really bothered him. So, there's a fine line between conspiracy and reality with the U.S. Mint. I would prefer Silver Eagles all day long, with the, many of these states looking at silver coins made in the U.S. as legal tender. But the premiums on Silver Eagles, on Gold Buffaloes, are crazy right now. And moving in that direction again. The fact that junk silver hasn't followed it the way that it did during the pandemic is testament to the fact that things aren't breaking apart for everyone to notice. This is just those who follow the U.S. Mint and their lack of capacity. But if I were going to say what is normally, I would say bars. But due to the threats all along this year of tariffs, the bar industry, or the products that are associated with silver bars, they're coming largely from Switzerland, and with Pam Swiss and Valcambi and others, they weren't imported very much, and so the premiums are higher on them than I like. Maybe 1-ounce rounds, those come from domestic refiners here, would be the next best. Or maybe even there are some coins like the 2026 Silver Kangaroo that we have in stock, or some of the other coins that are not American Eagles but are of the other 6 major mints, the Krugerrands, the Britannias, the Philharmonics. They're right there. And because the bar market is inflated, I skip it. So it would either be junk silver, 1-ounce rounds, or coins from probably not even the Maple Leaf, which is getting inflated again. It would be South Africa, Australia, UK. To me, would probably be the 3 that would stick out as being a good value right now.
You had mentioned in passing earlier China's changed policy about silver exports. We have a question from Golden on what impact does China restricting exports of silver mean for us and the LBMA?
Well, I think it means a lot for the LBMA. Um, it because of this, and because the move to classify silver as a resource of national interest, that's China. And then you add the U.S. putting it on the critical mineral list, which means they too can curtail exports. The president can do it without congressional order. And then you look at the essential role of silver in solar panels, electric vehicles, semiconductors, defense, you name it. I think what it really does is it shows that both countries are viewing silver as a strategic asset. It's not a commodity anymore. And, I think you're looking at a potential supply crisis and rising strategic value. What starts out as a trickle turns into much more than that. And, the people watching this show and listening to others in the industry who talk about this are way ahead of the curve and think, well, geez, everyone knows this. But walk outside your bubble and talk to anyone who's well-read, reading the wrong stuff, mind you, they won't have any idea about any of this. And so we're a ways away from that moment where it turns into a stampede. But it will curtail, I believe, it will curtail supply. And in a market like silver that is so massively rehypothecated at the upper levels, meaning the same contract is sold over and over and over and over again, creating a real problem. Remember, the market cap of silver is the size of a pinhead, and you throw a bunch of money at it, and it doesn't just go up, it explodes higher. This is what they've been trying to hold back. And I think that the big money across the globe understands this. I think they understand that this is a rush to a quiet rush to accumulate the resources. And I think they know that that if they don't do this, they being all of the governments, and really work hard at protecting their own supply chains and their own strategic stockpiles, silver is a necessary element. It's necessary in moving energy. It's necessary in moving civilizations. As dramatic as that sounds, there is no element on the planet that conducts heat and electricity better than silver. People say copper. Copper's too slow. Copper's going up too. It's reclassified. But silver is a needed element. It is critical. And I think it will start to affect the supply chain. I think people take for granted for far too long how easy it is to get silver. I talk to people all around the world who have a next to impossible time of getting it all around the world. I get emails every day saying it's impossible to find silver, impossible to find silver. So it's been something we've taken for granted here in the U.S. I could see that rapidly changing if all of the governments start to say, hey, we better get into a protectionism type of mode and not sell this to the United States and to North America. Let's take care of our own first. And you could argue that's what the U.S. is doing right now.
Right. Yeah, and then we're seeing that not just in silver, but other critical minerals. And you've talked to us about that for, the past year at least. Chris P. Bacon asked a related question. With the vast volume of paper trades outweighing the physical investors by such a large amount and the increase in physical demand, as we've described, will the spot price be able to stay suppressed for industrial needs?
No, I mean, over time, you can't suppress it. I think over time, the direction the market is moving will win. Throughout that greater trend, there are moments of suppression. These are some very big entities that have a lot of firepower. But no, I think long term, the trend is moving in a direction that you won't be able to suppress it. And I think we're setting up for a battle between the industrials, which would be the Teslas and the Sonys and the Samsungs, the hedge funds, the investors, but now you can add into it the government. And bald guy Money was talking about, and he gave me a shout out on his show today. So thank you, Roger. I appreciate that. Talking about how I've talked about the military industrial complex's role for so long, and now it's being validated. He says, look, the U.S. government just for military alone will need between 50 and 100 million ounces. And I think that's on the low end. So you put into it the government putting a floor into it, the government now going after it, governments going after it, restricting supply, restricting exports. And at some point, you add the government into the mix. You have a three-headed monster all battling for the same ounce of silver: the industrials, the hedge funds, investors, and now the governments. And I think it will make it nearly impossible to hold the price down over a long period of time.
Here's another curveball in there from JJA, and you've brought this up in the past, but it used to seem like it was a far time away, but no, it doesn't seem that way anymore. On July 4th of 2026, if gold gets marked to market, what will happen to silver? And there's many different aspects of that you might want to touch on with your conversations with Judy Shelton, et cetera.
Yeah, Judy said on July 4th, 2026, in no uncertain terms, Trump told her while she was part of the transition team that, and she's saying this all over the place, not just telling me. She told Michelle McCory on my show as well. We've interviewed her twice in 6 months, and she said, yeah, they're going to revalue gold. Now, that isn't conspiracy. It's actually in the stablecoin bill, in the Bitcoin. It's in the Genius Act, where they talk about, yes, where they talk about in 2026 revaluing gold. Now, the question is, do they revalue it to market, or do they revalue it to a number like James Rickards says of 24,000? That's debatable. We'll leave that up to the future to decide. But there's a 95% correlation in all of history between gold and silver. They don't move independently of one another. They move in tandem, not always in perfect symmetry. That's why they say gold goes first and silver goes further. My guess is that you're not going to see gold go to the moon without silver following along closely, and on a percentage basis, much, much more. What also, I think, highlights that is the amount of deliveries into this country. And, you know, everyone was saying and they still say it, that it's tariffs. And I just want to say BS, it's tariffs. It's not tariffs, everybody. That's what they want you to think. That was what enabled the free flow to come into the country. That's tariffs. You'll get it back at some point. But for now, we need it because it's tariffs, because we have these huge short positions. And if we have to pay the tariff to cover our shorts with all the delivery requests, we're dead. So send it back. Not tariffs. They're reshoring it. And they did this before, oh, by the way, we're going to reclassify it strategic. You think that silver's flowing back? No. Some of it flowed back, sure. Some of it was tariffs. Some of it was arbitrage. And some flowed back to give the LBMA another couple of weeks on their lease on life. They don't want it to blow up so fast. But, you know, 50 million ounces goes back there between Shanghai and COMEX. What does that give them? Another few weeks, a month? It was already trading in backwardation on Friday. It's right there. It's hanging on by a thread where there's 700 or 800 million ounces traded every day with 150 million ounce float, meaning there's 150 million ounces in silver bars that we're told. Who knows if it's all available, but they're trading 800 million ounces in deliverable spot contracts every day. I'm having David Jensen on Wednesday, who is an expert on the LBMA, and everyone should check out his Substack. He's fantastic. I read him everything he puts out. This is exactly what he's been saying. This is what I've been saying to you since 2020, that there is a rush, which starts out slowly and quietly, to accumulate. It started with the others in 2020, the big group that came on the Commitment of Traders report. Who are they? They're sovereign wealth funds. Who are they? They're central banks wearing a different hat. They're their friends. They're their associates. They're the biggest money in the world, but the most well-informed money in the world. And then it's the central banks, it's the commercial banks. Now we get validation from China and from the United States that it's really important to hold this stuff. And we can see this. We see the exchanges breaking down. If you don't, you're not paying attention. So yes, this is changing very fast. And I think that you can only manipulate a market over a period of time by pushing in the direction that it is going. And it was easy to hold down gold and silver for all these years in a world where the dollar was revered and our policies and our currency and our institutions were trusted. Are any of those things true anymore? Maybe not. And if so, you're seeing a slow motion rush, not too fast to cut off the nose to spite the face. Everyone said, why don't they just drain the LBMA? Because it would be over like that. Instead, you bleed it by a million paper cuts. And at some point, that becomes the patient starts bleeding out from all the paper cuts. Then everyone rushes. How far we are from that, I don't know. But I would say that to be on the wrong side of this trade right now, when you see the resiliency, the strength, where it's right back up over $50 again, after everyone's saying it'll be another 10 years before it gets back. It's over, they said, when gold broke through 4,000 down to 3,900. It's over. No, it's not. When you have the chief investment officer of Morgan Stanley saying put 20% of your assets in gold, and when I say gold, I mean silver too. He didn't say that, but I'm saying it. When you see Michael Hartnett saying no, 25%, when you see Jeffrey Gundlach saying 25%, the Bond King saying 25% isn't overweight, you see all these things happening at the highest level, talking to institutional traders. No, we're not. And silver will outpace people's expectations, and gold probably will get revalued. I do believe it will. And silver will come along for the ride. To what degree? Don't know. But even if silver was gold was marked to market on the balance sheet at $4,100, well, let's take 4,100 and divide it by $42. That's pretty easy math wise. It should be right around $100. But 4,100 divided by 42 is $98. 42 is pretty much the average gold silver ratio of the past 100 years. So silver could easily double. And it's funny if you look at the way cup and handle formations are measured. You take the top of the cup with 1980, and silver's in a 45-year cup and handle. Everyone talks about that. And breaking through 50, you're breaking through the cup. You're breaking through that resistance level, the big cup, and then the handle. It's like a double cup and handle almost, but that if you take the way you measure that in technical analysis, you take the top of the cup and the bottom of the cup. The top in 1980, the bottom in the early 90s, $4, $50. The difference, $46. You add it to the top when it breaks through, that puts it at $96. That's 42 to 1 right now, which has been roughly the 200-year average since the Industrial Revolution. So Keith Neumeyer wasn't wrong. He's just early. And I would say that silver will follow. To what degree remains to be seen, but $100 silver is not stupid. It is not out of line. And if you realize it's really coming out of the ground at 7 to 1, that's the geologic ratio. He said it again today in an interview I listened to. I was listening to interview him today. And you take 4,000 right now and divide it by 7, silver should be $570 right now based upon the geologic ratio. So these numbers that seem absurd really aren't from a logical perspective.
Yeah, Keith being early, and perhaps you being early as you've been beating the drum about the BRICS Plus impact on the dollar and the U.S. Treasury, and pivoting out of those and into physical assets, primarily gold. That's the curse and the blessing of being a CEO. Is you're visionary. You're always looking down the road far. You're not just looking at your toes or at the end of the hood of your car. You're looking far down the road to see what's coming based on the direction. That's why
if you don't, you're going to wipe out. And I say that from a skiing metaphor. You know, I've always fancied myself as a pretty good skier. And if you look at the tips of your skis, you're dead in the water. You got to be looking 10 feet out. You got to see if you're skiing moguls, you better look 10 to 15 feet ahead of you. And the same thing is true here. If you are not rolling with the changes, you get rolled by the changes. And I would rather be 6 months or 5 years early than 60 seconds or 5 minutes late. I really would. It's a curse and it is a blessing. But I think, you know, and maybe I'm just silly enough to have the courage to say it, being way early and being accused of that. But a lot of the things that I said on your show, you know, I look back and say, yeah, it was risky to say it, but somehow a lot of it has come true. And I'm not trying to pride myself as a soothsayer or a prophet or a mystic. I just maybe am open-minded enough to try and connect the dots and tell people that when most people wouldn't have the courage or even the ability to look at it, connect them, and say it publicly. I do. But I often say, I don't know if I'm right. This is what I see. I connect the dots. This is where the logical Occam's razor, my logical outcome comes to. And I do think but the Genius Act in many ways has created a new monetary system, and the acts of the government in securing just about any basic commodity metal as strategic is very enlightening. It's illuminating. We are moving away from the traditional Keynesian debt-based system into one of who's got the goods. I don't want the paper promises. I want the real thing. And I think this administration understands that. I do.
As far as being ahead of your time, that is echoed by Rick Rule, who says when you're a contrarian investor, you have to be willing to be wrong for a while before you get proven right. And by the time that the crowd proves you right is the time that he says, have the fundamentals changed because of that? Do I need to start lightening up in any way? And as a preparedness, you're right here in the heart of our viewers and subscribers who've been here since 2013, remembering that the old saying in preparedness is, I'd rather be 7 years early than 1 day late.
Yes.
By the time everybody knows, you go, oh dang, now everybody knows. Good luck trying to get whatever the resource is from a preparedness standpoint. Question here from Matthew Loyascano. Do you see a point in time where governments restrict private ownership of silver because it is so crucial to power and military needs, especially with the AI money being spent?
I mean, I'd like to say no. I mean, history has shown that does happen from time to time. But instead, how about we create the largest stockpile of silver around and have it held by BlackRock and JP Morgan? We'll call it SLV. And anyone who owns it in a managed account, they can never take possession of it. I mean, it bothered people that Saudi Arabia bought, I don't know, $200 million worth of silver through SLV, but they bought enough to where they can stand for delivery, and they probably will, and until the trust starts to disallow deliveries from the authorized participants who have what's called a basket. It's millions and millions and millions and millions of dollars worth. But my point is simply this. I think it would be much easier for them to come in on a Friday night and nationalize SLV and all the other ETFs that BlackRock and JP Morgan are involved with. You have the company that paid the largest fine the Justice Department ever handed out for manipulating a market, JP Morgan, and it was a silver market at that, still allowed with their buddies BlackRock to control the world's largest silver stockpile. Much easier to come in on a Friday night, take that, put that money in people's money markets and say, what? We didn't break laws or infringe civil liberties. All we did is close the account. The prospectus gives us every right to do that. Go ahead and buy Silver Eagles. Go buy whatever you want. We're not making it illegal. I think that would be their first choice, because when you nationalize assets from your own people, I think you cross a line that is almost impossible to come back from, at least in terms of trust. It's one thing to do it to foreign nations like Russia, like Iran, which is bad enough, which has already created I think, a huge loss of trust and confidence in the system. You do it to your own people, it's over. You will never be trusted by the worldwide community ever again, especially when countries like China and Russia and all of these other countries, India, are allowing, promoting, endorsing metal ownership. It makes sense to ask the question, and you should always be prepared. You prepare the best you can, but at the same time, you hope for the best. And I don't think I would worry about that at this point. I think they would have the largest stockpile in the world with a pink bow wrapped around it, held in JP Morgan vaults and BlackRock vaults, where they could do this and still have their cake and eat it too.
We've been talking a lot about gold and silver. What about platinum? We have a question here from Eldon Elder saying, do you expect platinum's price to return to its historic norms of being equal to or greater than gold's price?
Well, geologically, it should. The question is, where do they revalue gold to? That's the biggest question. And because of the geologic anomaly, if you will, the price and geologic anomaly, where gold is maybe 30 times less rare or more than platinum in nature, and platinum's main source of production is
Russia
South
and South
Africa,
Africa, yeah.
and I think Zimbabwe. Those three countries. Yeah, I mean, it should, and there's every reason to. And when you talk about how hard it is to get supply, like in this industry, the U.S. Mint hasn't made any silver eagles in a very long time. I mean, platinum eagles in a very long time, 3-4 years, and they didn't make any this year. And I don't think next year they have it on the docket to make 2026. The sovereign mints are woefully inadequate in terms of their production. Platinum should be part of people's portfolios, but I don't know. See, gold and silver are viewed strategically and monetarily. I don't know how the U.S. government and others view platinum. I would argue there'll be a rush to get all elements that will ultimately, whether admitted to or not, be viewed as strategic. So whether or not it bypasses gold the way that it did for so long is debatable because of the potential of gold being revalued, but it should do very well nonetheless from a percentage increase, percentage-wise.
Speaking of critical materials, Silver Bushman says, being that silver and copper are on the critical materials list, is it possible that the government is going to aid in mining? So we'll ask that about, we've often had concern expressed from investors that there might be nationalization of mining because of the strategic interest of governments, but this is a different question. Will the governments be fast-tracking mining permits, et cetera, helping out with mining, making mining happen faster and better?
Absolutely, and there are a couple mining companies that they are actively investing in. Yeah, they will, and they should. And it's at some point we have to be in charge of our own destiny, and I think that it would be silly to not fast track and aid in mining endeavors of all critical elements. That's what this is becoming. This is becoming a rush to secure the ability to be productive and to be self-sufficient. So yeah, I think we will see that, because you look at silver, the majority of all the silver coming into this country is coming from Peru and Mexico and Canada. We are subservient to these other countries, and that's not a good thing for something that is considered critical.
Yeah, we've also talked on our channel, echoing what you just said, for example, Guardian Metal Resources about uranium. Excuse me, not uranium, Tungsten, which is used in armaments and that sort of thing. They've got government support and interest helping them with that. Argenta silver, talking about government fast tracking of permits. It's a very mining friendly place for them as well. There was a question here from another viewer asking if you have any particular opinions about any gold or silver mining stocks that people should consider, or at least a place to go be taught to fish so that they can learn how to catch fish in that arena.
Well, I mean, it's not certainly not advice. I'll tell you that I've long held First Majestic, and I think they're one of, if not the most pure silver mining plays on the planet. You look at a company, what the heck is their name?
I know
They're one of my
Dolly
largest
Varden will
holdings.
be here tomorrow, so we're talking with them about.
Yeah,
And they're
Sean Kun is awesome, and I love Sean. And but a lot of the big silver companies are having a hard time finding silver, so they're kind of turning into gold companies too. So I can never, I always forget their name. They're one of my biggest holdings, one of the biggest silver companies. I can't even think of it. It'll come to me. But
That's
they've
fine.
bought a bunch of gold mines lately, and so I look. I think that I think for me, it's the place to go when you don't own any would be the majors, the pure silver play like First Majestic, the royalty companies, Franco Nevada, Royal Gold, uh,
Beaton.
Silver Wheaton. These are all really good plays, but the majors would be the ones that you start with, as far as I'm concerned, anyway. Um, because when as Rick says, 0.5% in gold and silver related equities is the allocation across the entire financial matrix. Um, yeah, if 5% of that money moves into mining shares, they'll start with the majors, and that's where I think you just make it easy to buy the juniors, and the exploration is very risky, and you need to buy a bunch of them to hit it on one of them. But you're beginning to see, the juniors are starting to get purchased by the majors. You're going to see consolidation, and that's good. That's the first step that you would expect to see. So for me, make it easy. Buy the majors, buy the royalty companies, and that's a good place to start. And I always will tell people, contact my friends at Sprott in the United States, in Carlsbad, California, Sprott USA. In this industry, it's as much what you know as who you know, and they're tied in on both fronts, and good friends. So I would recommend them all day long.
This is an interesting one. Thank you, Chris Bacon, for asking this question. The crushing weight of inflation in fiat currency is frustrating. I would say it's more than frustrating. It's becoming existential for people losing their homes and their lifestyles and everything. Do you see a move from fiat toward precious metals-based currency at any point? And I know in the back of my mind, I'm thinking you can do that today if you get into BitPay. But go ahead and say, what do you see as far as a move from fiat towards precious metals to protect people from the crushing effects of inflation?
Yeah, I mean, there's no question about it. I think instead, I mean, look, what we have right now, whether we admit it or not, is a K-shaped economy where the wealthy are getting wealthier, and the poor are getting poorer because of the inflation that is eating away at purchasing power. It's insidious, no question about it. Um, and you have 11 states that have allowed or are moving in the direction to allow their people, their constituents, to be protected from the inflation that is built into the system, and one where you have the Fed right now that is just stopped, or they're going to stop here next month, quantitative tightening. You can see that they are going. We've been seeing lowered rates, and yet they're 50% away from their inflation target, which hasn't been hit in, I don't know, almost
Hmm.
60 straight
Hmm.
months. They've hardly ever hit it. So inflation is real. And I think, yeah, I mean, whether or not you have states like Florida or Texas that legally say metals can be used or maybe they make it digital. Like Texas, I think, is going to allow you to deposit metal at some point into the depository and then trade off of it rather than walking around with gold and silver in your pocket. But I think, yeah, I think you're beginning to see that. And you can do it yourself. You can be your own bank by holding gold and silver. And this is, people don't quite get it because they look at the dollar index and see it's only down 9% or whatever against a basket of other crappy currencies, but measure it against silver, it's down 70% this year. Gold, even with the pullback, gold, almost 60%, even with the pullback. We're right back to where we were. But the point of it is that you measure it against gold. James Rickards measures the dollar index, measures the dollar's value since 1971 when we closed the gold window. It's $96,000 if measured in that way. But if you measure anything you buy in gold or silver over the last several years, prices are going down. They're not going higher. You look at gold, which is quadrupled, and silver even more. The S&P 500 this year, and this is in the face of the greatest tech boom ever. So yeah, I think that I think those are all valid points, and you own gold and silver not to become wealthy, as I always say, but because it is wealth that will protect you from a dollar debasement. And it's funny, you have mainstream media talking about dollar debasement. They call it the debasement trade. This is where they're going, and I think they realize that in order to have any hope of growing our way out of this problem whatsoever, it starts with debasing the dollar. You do that by letting gold and silver go much higher. And you do it so that you can reshore manufacturing. And that's where Judy's idea comes in of pegging gold to the back end of the bond market. Because if you do that, you have zero upfront borrowing costs. So you bring back you reshore your manufacturing with zero upfront borrowing costs. You let gold go much higher because the redeemability is in gold, no interest. And you use the rise in gold, largely, I think that will be brought about by companies like Tether, who already have over 12 billion in gold, and they're using it by the interest that is created by those stable coins that are issued in the Genius Act are not transferable. The interest isn't. They have to keep the interest, and I believe that they're buying gold and Bitcoin with it, Bitcoin to pay off the debt, and gold to devalue the dollar and to peg it to the back end of the bond market. And I think you'll see that. I think gold will outpace everyone's expectations. So you own it not to become wealthy, but because what it does is it protects you in the face of a debasing dollar. And I think that is the only path to potentially growing our way out of a problem that otherwise has default or hyperinflation written all over it.
I want to give a quick glance at the weekly specials for everyone's benefit. I'm sharing them on the screen right now because I've got to wrap in a few minutes due to travel. We've got 3 of them that just got announced. I don't know if you can see those on yours or if I should
I see those.
Okay.
So the BU grade Saint Gauden stands for brilliant uncirculated. And what it means, it's not certified by PCGS or NGC yet. If it would be, it would probably come back MS60, MS61. Look, the $20 gold pieces may be my favorite coins of all time, and the Saint Gauden and the $20 Liberty. The Saint Gauden is what the American Eagle was fashioned after. It was named after Augustus Saint Gaudens, a famous sculptor from New York back in the turn of the century, and amazingly beautiful coin. It was in someone's, not this because we believe it to be uncirculated, but if it were, it would have been in someone's pocket 100+ years ago. And so to me, it's as good of a choice as you will ever find at $99 over melt. So there's 0.9675 of an ounce in that coin. So you're talking it being at or below spot. I haven't done the math, but pretty darn cheap for a coin that in 2008 and 9 with $1,000 gold price, I would have paid you $1,400-$1,500 to buy back as many as you would sell me, a 40 or 50% premium to spot. If we take gold at $4,100 and multiply it times 0.9675, there's $39.66 worth of gold at $4,100. So you're below spot on that coin. It's as good as of a choice as you can find, with gold eagles and gold buffaloes selling at $200 and $300 over spot right now. I'd buy those all day long.
And for everyone here, thank you for jumping on this. Sorry about the pivot on the time due to travel restrictions on my side and my son Elijah's side, who does our technical work. This is when we could do it, and Andy was gracious enough to pivot with us and make this time work. We should be back more regularly on our regular time for the weekly market update for the rest of the year. And always grateful for your presence here, Andy. Thank you, everyone who joined us for this. That was awesome to get your
Hey, wait,
questions.
we missed two of them, by the way. If you want to mention, I don't need to, but if you want to mention the other two, we can.
Oh, shoot. Yeah, okay, we just take a second here. Let me share that again. Sorry about that. One moment. I'll get right
The
back
third
at it.
one was the most interesting to me,
One second.
actually.
Yep, let me get there. And here we go. Mhm.
Where's Elijah when you need him?
Ah, no, this isn't Elijah. This is just a me driving problem. Here we go. Let me get this back up. Oh, that's not the default. 1 second. Here we go. And got to zoom in. I had it all zoomed in and everything, so now it's all tiny again.
I mean, we can skip it. It's okay too.
Yeah, that's all right. Real
I
quick.
know they were
We'll do a
silver
quick one.
maple leafs.
Yeah.
Okay, so 2025 silver maple leaf 675. Again, you can see this is reminiscent of what we saw before. I told you guys this would happen. Everyone thinks he's talking his book crap again. No, I'm not. Premiums are starting to rise on things like 1 ounce silver maple leafs because it's getting harder to get. Excuse me. And you have a growing awareness by the public, little by little by little. You know, as my show says, it's starting to happen. And just a little bit of increase. When you got chief investment officer of Morgan Stanley saying sell half your bonds and put 20% in gold, and Michael Hartnett saying, you know, no, make it 25%, and Jeffrey Dunlock, the bond king, saying 25% isn't overweight, these things are starting to rub off and spill into this industry. At 675 over, we're starting to get like what we were doing during COVID again. Premiums are rising, availability is falling. It's a high price. It's much less than American Eagle. It's higher than some of the other sovereign coins. But the point of it is that you're beginning to see premiums rise. And that's one of the things that is very concerning to me, why junk silver is such a good buy. But the 2025 Maple Leafs and sealed boxes, 675 over. The last one is interesting to me because I haven't seen palladium in any amount for a while. It's been very, very hard to come by. And they have big spreads. There hasn't been a ton of demand for it. I don't even know what palladium is today. Let's just look and see real quick. Palladium right now is $1,450 an ounce. And it's below platinum. It's below gold where it should be. For a long time, it was much higher than both. If people want to have a few ounces of palladium, it's the first time I've seen any in a long time. So at 199 over spot, you can see they have big premiums and there's a big spread. It's just because the availability of it is next to none. So it doesn't have the same type of liquidity because of it, or a bigger spread. But I will tell you, for several years, it outperformed just about everything. So having a few ounces of palladium wouldn't be the worst thing. And it's something I haven't seen in a long time, couple of years.
Well, we just wanted to thank everyone who was here and participating in the live chat. Your questions made it real, made it live. That's what this is all about. Andy's about keeping it real and keeping it as live as possible. So thanks, Andy, for pivoting with us, and everyone for being here.
Of
As
course.
always, just guys, if you don't want to miss a single episode with Andy, make sure you're on our free mailing list. Just go to libertyandfinance.com. That's our website, libertyandfinance.com. Put in your email address, click submit. You'll have to confirm once on a confirming email. Then you'll get automatically in your inbox one email per day with our latest interviews, all of them with Andy, and our latest weekly specials. You won't miss a thing. Andy, on behalf of all of our viewers and subscribers, I just appreciate your presence here with us. Thanks for joining us.
You got it, my man. Safe travels done again. Thanks for having me. We'll see you again next week.